Right, it's education time where we investigate a topic which will be helpful to new traders. This week, we explain the concept of net asset value. Mark, let's start with you. Basically, in simple terms, why do we care about net asset value?
Well, net asset value is another one of those kind of things that we've been discussing recently, of fundamental importance to anybody who's involved in equities. It's simply the value of the enterprise. So at any given moment, we're aware that the enterprise that we're trading has a certain value.
Yeah.
And we divide we take the total assets, subtract the liabilities, and for just a fleeting moment every so often, we have an idea as to what each share is worth. In the article that we've got that people can access through Follow Hot Stocks, you can actually see a kind of overview and a breakdown as to how it works.
Right.
One of the key things with net asset value, or NAV as we shorten it to, is that often shares are trading in some historical relationship to what that net asset value is.
Right.
They're either trading at a premium, in other words, the share is inferring more value than the assets are worth for a discount, or it's close or whatever.
The question I was going to put is, why should we care about net asset value when they say that the stock market is an aggregation of all the news about the company and captures every single thing, and the value that you arrive at is actually the correct value, and the market is never wrong, right?
Well, look, I mean, I kind of sympathise with that argument. This is a key kind of keystone for people to have a fundamental understanding of where the market is, even allowing for that sentiment and that feeling and emotion that may be taking a share price to wherever. One finds over a large period of time that the share does tend to have some kind of point of departure or relationship with the net asset value underneath it.
Are there companies where net asset value is more useful than others?
There are. I mean, there are certain classes of share where the assets are more tangible and can be more easily valued and can be rolled into a comparison. There are others, shares such as Naspers and various other counters, where it's very, very hard to tangibly pin down what the value is worth because of goodwill and because of other factors.
Right.
I think it's pretty useful, though, to go through the exercise and understanding that there are different kinds of businesses. I mean, one of the cases I found most useful is when you have these diversified industrial holding companies like Remgro, and then you can look at the accounts, the company accounts, and see what the director's valuation of all the pieces are, and they arrive at a published net asset value, and they say it's X, and it's either at a discount or a premium to the prevailing share price.
I think in most cases at a discount.
That becomes a learning moment, is, why is it at a discount, and has it always been there, and under what circumstances might it close, and so on and so forth. But look, here's the point. This is something which is going to require 10 minutes of our viewers' time. So rather than just listening to this now talk, if this is of interest to you, make sure that you've signed up to www.followhotstocks.com, and then you'll get an email once a week with something like this, which has got a PDF attachment. Not in the email, you've got to click on the link, and then it takes you into the site, and then you can access this material. And this has been laid on for us by the guys at Global Trader.
Absolutely. Thank you, Paul.